Alright, Monday, the 30th of October. Alright, Reagan FCX. Where was it here? I posted something under Twits somewhere around here. I don't know where it's at. Wherever it's at. It's somewhere. Alright, so we'll just start off here. Alright, well, let's start off with the big picture here. Oh, this will work here too. Alright, so the story with, we've got a breakout in oil, right? Okay, so oil is breaking up, but this is rig. Okay, so most of the players are going to look at oil's move as short term. It's not a secular type move. Basically, what I think, it's just all the bankruptcies and everything finally thinned out and it overshot on the downside. And this is where the asset, what do they call that when they scoop up assets? Vultures. The vultures came in and bought up the assets here. Now oil's going to go up the other way, but I would look to actually purchase oil stuff after the next recession. Alright, I suppose we have a bigger view of a, what would this be, like an inverted head and shoulders kind of thing. I guess you could kind of do the old cup and saucer type thing also. I would probably have, this is probably a pretty good bottom down here. So your target would be up in here. The point and figure, I think, point and figure broke out, came down and retest. This is a, I think I haven't really much in intraday. We have 1 minute. Go back to daily. Better go classic here. Off the bat, close only. Point and figure just has price on here, so yeah. So okay, so we did so 8.5 and 16. It is about 7 and 7 higher is about 22. Okay, so this is going to be your resistance area. This will probably hold. The target will probably be up here if we break another level here. If we whip up some sort of news to get it to go through the other side. Let's take a look at sharp chart here. Okay, so we basically have oil finally falling apart, coming out of its secular cycle. It's basically, so this is a pretty decent bottom here. I think I was aiming somewhere between 12. The count would be up to 16 on here, you know, up to the upper area. But this is kind of waning here. Now, let me see what a monthly looks like. Alright, so what do we have here? Okay, so this period here, this was the bottom in oil, right? 1997. Was it 97? Oh, that was what commodities in general. This took a while to take off. Okay, so it's basically below previously where it was. For me, I'd kind of have a basically a neutral bias on here. So you can see a lot of volume where people got out. You know, we're talking what? Here's $26 oil. You know, now up to, I guess I could do a ratio of this too, right? Rig, oil divided by rig. So it'd be show stronger. This would be rig versus oil. This Texas Intermediate crude. Okay. So this will show you if rig. Okay, rig is underperforming oil, so it's better to be in oil than be in rig. If you go off of rig, I'm just using oil in general here. So rig has been underperforming oil for 20 years. Okay, but that doesn't mean it can't change weekly. What else do I have to look at here? This, like I said, this is probably a decent bottom. Your target would be, okay, what other targets do I have on here? I guess that's daily. That's weekly all for this year. What about daily? Okay, so the new pivots are coming in here. I'm going to guess that we're going to get some follow through here on oil. So rig should actually, the ultimate target is up here at 16, but it's also going to have to fight oil too, and or any type of other carbon. So they still have negative earnings. I'm not a fundamentalist. You could probably do buy rights if you're long the stock already. After it took off here, SAR is coming down. Like I said, my bias here would be sideways to up, but I'm not looking for a secular market. There's a secular cycle in commodities for another decade. That should be about right. Right? We had a peak in 1980 and the bottom 17 years later. So a peak in 17 years later would be 2028 when the cycle would start up again. Approximately. What do I have here? We do have a lot of volume in here in this area. The other thing too is buyouts, mergers, things of that nature. Let's zip over to FCX now. Copper is going the other direction. Let's just start off with copper. Okay, so copper is kind of rolled over and going the other direction here. So that may be a leading indicator of things on its way, because we are trying to jam the economy into a recession. So my bias here is on the short side. This one, actually, FCX bought Phelps Dodge, which I think may have been in the Dow at one time. I was kind of shocked at that they were able to buy it, but then again, Kmart bought Sears. Using the property as collateral. Okay, so we have a big V down here, a large sideways pattern. This, in my eyes, this would probably be under an accumulation type deal. I would probably, I'd start buying under 9. We may have a large, it's one of these things that, right now you have a larger sideways pattern, and it's either going to be accumulation or distribution. Like here, it's sideways pattern, and it'll be in distribution. 37 down to $3 in about 18 months. Nothing like a 90% loss, but I'm looking for the stronger dollar to cause havoc in commodities. But I am looking for some sort of North American drought and hard winter here coming up. So any type of weakness, not particular in copper because it's economic. You have to watch housing and autos and all that other fun stuff. But the dollars, commodities are priced in dollars, but also traded on in Britain too, so you have the pound stronger. This would be probably one of your buy and hold kind of things to spend a while accumulating. What I would probably do is, if it does dip down below, what do we have? If it kind of squirts down underneath here, I'll probably write some puts to get long. How are they doing? And they're still showing earnings. WAP is at 1405. What do we got for point and figure? Let's see about overhead resistance and stuff. It's a short term, so it broke down. So 1475 is overhead supply on a short term basis for October. And daily is probably just going to be a lot of sideways on here. Alright, so this is kind of crucial here. Possible of a head and shoulders on here. So it's the mark 15 to 13. So $2 lower, 13 would be 11, so that'd probably be alright. And what do I have? Close only, traditional. Okay, so this would be overhead. Overhead resistance. And support at 1050. Just going off of the volume. If we get, depending upon copper, I'll go through the futures now. But basically, how I'd look, I'd be long. How about this one? Long. That would be long. rig short FCX, and that's just breaking out at the bottom. So long rig short FCX. That's how I'd probably play this here. And possibly at 75 cents to $1.30 ratio wise. And a lot of volume here. So a little bit of work on here. But that's how I would lean. Okay? So long rig, short term. But probably be more interested in playing the short side going into the recession here. And then FCX just waiting to accumulate it, just due to the fact that it is the behemoth. All right. There you go. Bye-bye.